For a check of the morning's business news, joining me now is Peter Switzer, founder of the Switzer Report. Good to see you, Peter. So why are economists predicting the first rate cut will be in May? And more importantly, are they right?
Well, Kenny, I've got to say, I've been a great supporter of the idea of getting a rate cut this year, and then I've migrated to February because the unemployment numbers remain good. We've been at 4.1% for 6 months out of the last 12. And usually when reserve banks raise interest rates, particularly 13 times, the economy slows down sufficiently so you actually do get a good reason to cut interest rates. But at this point in time, the RBA's efforts haven't worked. And I guess it raises the question, Kenny, have they failed? And as I don't like to say they've failed, but the bottom line is inflation is coming down slower than other countries. Other reserve banks or central banks around the world raised their cash rate over 5%. We stayed at 4.35%. So in many ways, the RBA has pulled off the double play of not killing the labour market, but at the same point, they're bringing inflation down, but too slowly. And that explains why economists are now migrating from a February rate cut to possibly a May one. And only bad numbers, slow economic growth, or a rapid fall in inflation is going to change that outlook.
Yeah, what are the big market moving events this week?
Well, basically, there aren't many really big ones. We will look closely at the last monetary policy statement from the meeting of the Reserve Bank. We'll be reading between the lines, but I'm not expecting to see anything. We haven't seen much for 12 months, and basically that sort of parallels the fact that inflation hasn't done much over that period of time. It's improved, but not enough to bring interest rates down. Also, mate, there's a lot of purchasing managing indexes right around the world. They're always looked at very closely. But I think the really big issue, mate, to look at is, will the US get more data that suggests that the economy is stronger than expected? If that's the case, what happens is they'll start reducing the number of expected interest rate falls, and that could hurt the stock market. So really good news on the US economy could be really bad news for the stock market.
Interesting. Peter, you've been poring over the minutes. What are the other big takeaways from the last RBA meeting?
Well, I think the bottom line is they are just preoccupied with the fact that there's this services inflation rate that is, if you look at what's happened to inflation for goods, it's really tumbling. It's doing the right work. But the flip side is on services, no, it's not working. And mate, can I just share a story with you? A friend of mine's been asking me for 12 months, when will interest rates fall? She's really worried about her home loan repayment situation, but she currently is in London. She's flying premium economy to London. So it kind of suggests to you that the interest rate rises haven't hurt a lot of people sufficiently to help bring services inflation down. And that, I think, is the core outlook or issue that the Reserve Bank really wants to see a solution to. Services inflation has to fall.
Peter Switzer, appreciate you coming on this morning. Thanks so much.
Cheers, mate.